Bubba trading on the side of the trading floor in Chicago right now. And Todd, thanks for joining us. I appreciate that. Can you explain how the corn is able to hang on like that when you have negative fundamentals all around it?
I'm Marlon. If you'd have listened to RFD yesterday, you would have heard the reason why. In all seriousness, really right now, what we're seeing right now in the corn market is a huge consolidation pattern that we're churning back and forth between, 370, 375, up to 385, and we'll make a run to 4. We might make a run back to 370, but basically we're really just tightly in a range here. And crude oil, the same thing. Just yesterday at this time, crude oil was up over $2 a barrel. Crude oil is really stuck in a range between 44 and 50. So overall, it's really, when you look at the daily gyration, it's enough to make you want to, take some medication. But when you think about it from the long-term perspective, it really gives you a much better view that really we're just in these consolidation patterns and the gyrations mean nothing. The one concern would be the breakout of the U.S. dollar. But of course, the dollar was over $1 and we were still higher than this. So we've already priced in my opinion, in these grain markets, the overpriced dollar. We've already priced in all the bad news. I don't think there's much that would drive us lower. I can only think of things that could drive us higher.
All right. Earlier today, we heard that Egypt may be snooping around for some wheat, and that I guess that was partly what they blamed on the sharp rally in the wheat market all of a sudden. What were you hearing about that big turnaround there?
Look, we said yesterday, $5. At $5, be a buyer of wheat. I don't put in any. I put no stake in you. I've been doing this for 36 years, and I have heard China and Egypt so many times over those years of what's going to happen. The technicals came down. We came down to a $5 level. We popped up. They trapped the shorts once again because there's too many people anxious to be short these markets, thinking that they're going to go to zero. Now, unless we're going to quit eating, unless we're going to stop producing, then they're not going to zero. And you have to be very careful, which is why when you get in levels like we are now at these low-end extremes, which for the current conditions are low-end extremes, you're not anxious to get short down here. You're not anxious to be a seller here unless you're a producer who's trying to get out. But if you're a trader, you don't want to sell in these holes. And when you get down these levels, these are like selling in the hole, and you're going to be forced to buy them up later. And that's what we had today. We saw a rally off the bottom off of 5, and before you knew it, the short said, uh-oh, we're wrong again. Watch 531 to 535 on the upside. Probably a little bit of a sell, a little pressure from there.
Todd, I have to give you credit where credit is due. You pegged it early, and that's exactly what's taking place. A lot of choppy action. Let's review real quickly. We'll take a look at our soybean trade before we head into the break, just to let folks know what the prices are doing. November beans currently 5 1/4 higher at 8.83 3/4. Back to the wheat. We go to Chicago wheat first of all, and right now December is up 11 at 527 1/2. Big turnaround in the wheat. Kansas City wheat on December currently trading at 495. That's up 7 1/2. In the spring wheat trade in Minneapolis, we're up 4 1/2 at 524 1/4. In the cotton trade, we've been on both sides of unchanged, but boy, it's getting pounded right now. December cotton down 70 points at 61.87. We'll be back more with Todd Horwitz on the other side of these messages, talking livestock.